Welcome to Daily Rates Live with the Mortgage Calculator. Thank you for tuning in. Today, what we'll do is go through some live rates and then do a deep dive into a topic here. But before we do that, we'll wait just a couple of minutes here so we can go live on all the different platforms. We are streaming this on YouTube, Facebook, and LinkedIn. So we appreciate everybody tuning in on all the platforms. Just give us a second here so we can go live everywhere and give everybody a chance to tune in. In the meantime, we put the chat up on the screen, so feel free to drop a comment there. We appreciate everybody tuning in early and commenting. Thank you, Julio, Owen, Raul for the comments. Jason, appreciate it. We'll get started here in just a moment. As we go through the presentation here today, please keep dropping comments there. And also feel free to drop any questions you have, especially when we do the deep dive into a different topic here. Thank you, Yakita, for the comment. Paul, appreciate the comment. Thank you, everybody tuning in from the Mortgage Calculator team. Let's see. Get started in just a moment here. Melvin, thank you for the comment. Appreciate it. And it looks like we are live on all the platforms, so we can go ahead and get started here. We'll take the chat off the screen, but please keep dropping comments as you tune in and drop any questions you have as well. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. What we do on this show every weekday at 11 a.m. Eastern is go through the live mortgage rates for different programs. Then we do a deep dive into a different topic every day. Now, today's deep dive is going to be cash out refinances. So our sales manager, Jose Gonzalez, with 28 years of experience, is going to do a deep dive into cash out refinances for us. But before we do that, just like we do every morning, let's go ahead and pull up our pricing tool and see what the rates are looking like. So Nick, let's go ahead and pull up that tool and look at the market and what it's doing here this morning.
All right, hopefully we have some good news. Let me switch my screen and we'll check it out. So this is our pricing tool for our team of mortgage professionals. This is going to show us the rates and the APR, including all the fees. For today is August 24th, so all the rate sheets are live just after 11 a.m. So we can check out the general rates. If you would like a full breakdown of all the fees that go into the APR, please get with one of our team members. We have over 300 licensed loan officers in 24 states. So for today, we will set up a scenario as we do every day. Set up a simple scenario to compare across the programs here. Loan amount will be $400,000. We'll set the LTV to 80% loan to value, 20% down payment. We'll set the desired price to $99. That means we'll ask the computer to find the best rate at one discount point in cost. And we'll compare our different loan types. We'll start with conforming conventional as we do every day. Then we'll check out FHA. And then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs using alternative income. We also offer VA and USDA. VA is only for eligible vets and active service members. If you are, let us know. We'll quote it up. And USDA is only for eligible properties. If you are shopping in a rural area that happens to be eligible, let us know, and we can quote that, no problem. So we'll start with conforming conventional. We'll do purchase, 30-year fixed for all our demos. Primary occupancy here, single family, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO of 760 and an estimated debt to income ratio of 40%. So with these settings, as we do every morning, let's hope the rates went down a tad. Yes, just a tad. So hopefully yesterday was peak rates. Today went down just a tad. Hopefully we continue to see it go down. So 7.375 today, 0.875 discount points in cost, puts our final APR at 7.538. Yesterday we were just over 7.6 on the APR here on the show. So the rates have gone down just a touch here, which is definitely a good sign. Hopefully all the market panic has stopped. Now, if our customer does not qualify for conventional, usually the next option we'll want to compare is FHA. So we'll set up the same exact scenario. Everything is exactly the same, so we can compare APRs across the program and see which option is actually cheaper here. FHA does allow a little more credit leniency and a higher debt to income ratio, so usually that's the next option if our customer has any trouble. It doesn't look like these went down too much. FHA maybe tomorrow we'll see some more action, but 6.625 rate, 0.75 discount points of cost, puts our final APR at 7.209. I believe that's about the same as we were yesterday. But in this case, if our customer qualifies for both conventional and FHA is a touch cheaper, as we can see. But our customers that can only qualify for FHA that need to use that program, definitely some welcome changes to the MI that have made it cheaper and more welcoming. So definitely a great option. Now, where we really specialize here at the Mortgage Calculator is if our customer can't qualify for either program. Many other banks or lenders don't have other options, but we have over 5,000 additional options under expanded guidelines where we can use alternative income if our borrower is having trouble qualifying. So we'll keep everything else the same, but notice we have our new box pop up for income verification. So full doc is what we use for FHA and conventional. So that would be 2 years of tax returns. So we would typically choose this to take advantage of one of these other options. We have asset related loans, business bank statement loans. Our investor loans are for investment properties. We'll talk about that in a second. Personal bank statement 12 month is the most popular program. That's what we use for the demo. We have RSU, stated, VOE, 1099, P&L, and no income, CDFI. So tons of different options here. But our most popular is our 12-month bank statement for our self-employed borrowers. Many times our self-employed borrowers have some trouble qualifying using their tax returns. Maybe they have some write-offs and maybe don't qualify at all, or maybe don't quite get enough income to qualify for the home they really want. So we'll solve that problem for our borrowers here by using a different type of income, no tax returns involved at all, simply their last 12 bank statements to determine a debt to income ratio using just their cash in the bank statements, and the debt to income ratio of 40% in this example. So with these settings, let's check out the bank statement options this morning. Ooh, so non-QM is about the same as it was yesterday, but since conventional went down, it's actually a touch more expensive here, which is expected, right? So 7.5 rate, 2.875 discount points and cost, final APR 7.629. Yesterday, conventional was almost identical to this. So yesterday was the first day in our history that we've seen a bank statement loan be actually the same or cheaper than conventional. But it's typical that they're a little bit more expensive. You see we have hundreds of different options here. Some of these at a little bit higher rates and costs may allow things like bankruptcies and foreclosures. So not only can we get around the income issue, but we can also get around some other issues as well with these non-QM programs. So tons of different options here. Please get with our team. They'll find the best one for you. Now, before we go into Jose's cash out examples, we always do a live pricing for investment properties. So we love to work with investors, whether they're first-time investors or seasoned investors. We want to have the best options, especially with the rates the way they are now. The conventional options are a little bit unfeasible. But let's set up our demo here. Same exact settings, 80 LTV, 20% down payment, and we'll compare our two options for investment properties. We'll have our conforming conventional, and then we'll check out our non-QM expanded guidelines options. Remember, the government programs, FHA, VA, USDA, do not work for investment properties. So we'll start with conforming conventional, and we'll keep everything the same as all our other demos. So we'll see the adjustment. The only thing that's been changed is the investment property occupancy. So we'll see the adjustment the conventional programs have for investments. And as has been the case recently, these are probably not very feasible options. 7.625, pretty good rate, but the discount points, 4.25 discount points and cost is significant. Less than it was yesterday, of course, but still very significant here. Final APR, 7.9, definitely pretty high there. And most of our investors would probably not even be able to get this option, as this would probably not be compliant. But even if it was, most investors would rather save $17,000 in this example to invest in other investments. So unfortunately, with conventional, these rates and costs are a little bit prohibitive. So that's where we love to present our non-QM options. So for our final demo here, set up investment, 80 LTV again. And we'll choose expanded guidelines non-QM. Now, first we have to select our income option, and the most popular by far is our DSCR. That's because it doesn't actually require any income or employment from our borrower. Simply use the estimated rental income from the property to determine a DSCR, debt service coverage ratio. So if the estimated rents can cover the PITIA of the mortgage we're proposing in this case, aka the property cash flows on a monthly basis, that's a ratio of 1.00. If the property does not cash flow on a monthly basis, that's a ratio under 1.00, and we still have options for that. For the demo, as we do every day, I'll put 1.5, which is the highest, so we can see all the programs. And the final thing is a prepayment penalty, which is standard on these loans. We always choose 3 years. However, there is options for no prepayment that will cost more and limit the loan programs. And there are options for 5 years, which will cost a little bit less, but not all loan programs allow it. So 3 years is the most common. That way we can see all the best options pop up. So let's check out the DSCR rates today. Wow! Jose, another mind blower. Boom! So as conventional goes up and gets crazy, DSCR this morning is even lower than it was yesterday. 7.75 rate, 0.85 discount points and cost. Our investor is a happy camper here. Final APR 7.812, less than conventional. So again, some record-setting shows we've had the last couple of days. Never before have we ever had DSCR cheaper than conventional, and never before yesterday have we ever had bank statements cheaper than conventional. So non-QM definitely coming on strong. Everybody recommend to check these out. Some amazing options. We have a ton of different options here for DSCR2. Some of these have a little bit higher rates and costs, may allow, again, foreclosures, bankruptcy, credit events, and very popular request, some of these options may allow short-term rental income. Many investors out there starting up Airbnbs and wanting to use that income. So tons of different options here. Please get with our team to find the best one. Now let me switch my screen again. And we'll get into Jose's detailed examples for cash out refinances. So obviously all the different options we go through every day. We go through a purchase example every morning. But cash out refinance is obviously a popular request. Everybody wants to know the limits, the different ways we can optimize our cash out, especially our investors. So I'm sure Jose has some cool examples set up. So Jose, if you're ready, let's make you big. And you can go ahead and take over.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Now, cash outs is a pretty broad category, right? So what I've done here is I have selected certain areas, right, so that I can show the differences in the various programs that we have. We're looking at primary residences, we're looking at investment, and we're looking at 2 to 4 unit properties, right? For which is very popular with our investors, and also would be the ultimate house hack for our primary owners, primary borrowers that would be able to possibly purchase their first property as a 2 to 4 unit, or look to refinance that property so that then they can move on and purchase another property. Definitely, we get preferential rates when it's a primary residence versus an investment property. So we are looking at various income types. We got our full doc, we have our bank statements, and we have our DSCRs, and I have a special treat for you with the DSCR option as well. So let me go ahead and share what we have here. Right. So now our first option is an 85% cash out on a non-QM loan, right? Non-QM is the only avenue to do a cash out above 80%. Even FHA, which traditionally, if you look at their guidelines, allow higher than 80%, but due to all of the overlays that are currently in place, you're not going to be able to get any higher than an 80% on an FHA cash out. You're not going to be able to get any higher than an 80% on a conventional cash out, but you're definitely able to get higher than 80% on a non-QM cash out, and as an added plus, no mortgage insurance, right? So the rates that you see here already factor in the additional risk for the higher loan to value and no mortgage insurance. So if you remember the rates Nick was showing you earlier, which I'm going to show them to you myself because I have some conventional options here as well. You're looking at 8.625 at par, which is pretty amazing for an 85% cash out. And you can buy that down to 7.5%. So now we do the same 85% LTV full doc cash out on a primary, right? So if you were lucky enough to have bought this property as a primary, now you're cashing it out because now you're going to buy another one, right? And here you're looking at 9.5% at par and 8.25% as your lowest rate option. And remember, this is, and I actually priced this out just in case there was any variance between in a 2 or 3 unit. I priced these out as a 4 unit, looking at what would be the most restrictive scenario, right? And so this is what you get for a 4 unit property. Very good options here. Now, to put a little perspective into the situation, this would be our 1 unit conventional, right? This is a conventional, which is always going to be full doc.
Is that at a different LTV though? What's
80%.
Got
Yep, 80%. So again, obviously, you're looking at a little bit lower rate than what we were looking at on the non-QM. Non-QM had us at 8.625 at par, and 7.875 on the non-QM option was costing 63.75. But remember, that's 85% LTV versus this one right here. 7.875 is costing you $3,000 at 80% LTV. So now we're looking at our cash out primary conventional on a 2 to 4 unit. This is 75% LTV, right? So you're looking at 7.875 costing you $23.44, and you can buy it down all the way to 7.25%. But remember, this is primary. Now, the same option going conventional, we do have one. We do have a very special outlet for this program.
What's the LTV on that though? If it's
75 okay. As well. This is 75 for our conventional investment. Right now, here we're talking about investment. Now, this product is listed as conventional, but it's not Fannie or Freddie. That's why we're getting 75% LTV. This is a very special product that we have at the mortgage calculator, which the outlet treats it and underwrites it as it is Fannie and Freddie, but it is not a Fannie and Freddie product. It's a portfolio product. So it's not a true non-QM. It's a portfolio product that we can offer. That's why we can take it up to 75% on a 2 to 4 unit. And this actually, I priced it out as a 4 unit. So very good option here, 8.5% as your lowest cost option and 7.75% as your lowest rate option. So now we have our DSCR cash out. Again, on the DSCR side, 1 unit and 2 to 4 units. Once you drop to 80% or below, whether 80% whether it's purchase, 75 whether it's a cash out, there are no loan level price adjustments. So you're going to get the same thing for a 1 unit. But again, look at this rate. This is, again, I'll remind you, this is for investment because DSCR is only investment. And you're looking at 8.375 with a lender credit. and 7.375 as your lowest rate option. Now, we do have an 80% DSCR cash out. It's a very special option. So you do see the rate is a little higher, the cost is a little higher, but if your borrower absolutely needs 80% on the cash out, we can do it. Very few options out there at an 80% cash out. Hence, like I mentioned, the rate is higher. There's less competition. They know that when you go to them, it's a captive audience, right? You don't have too many places to go to get 80% on a DSCR cash out. At the Mortgage Calculator, we do have that option for you. Even though I would probably recommend the 75% option and maybe go at par and save the money, right? And our last option here, which is a very popular option for non-QM, probably the most popular non-QM option, is bank statements. As you know, the origination of agency loans has gone down precipitously when the rates started adjusting, but that has been compensated by the increase in non-QM and specifically bank statement options, because there are a lot of self-employed people in the market, and those that previously were going for the full doc conventional loans luckily had the option to transition to bank statements. Most of our self-employed borrowers were not really planning on going 5% down anyhow, or 3% down on a conventional loan. So they did not really hesitate, or have not hesitated, to go bank statement on a non-QM, for example, on a non-QM purchase, which would be maximum 90% LTV, right? So in this case here, 375, our LTV here is 75%. And we are looking at very good rates here, 8.875 as our par rate, 7.75 as our lowest rate option. And we are able, actually I put 80% there, but it's 75. So we are able to go 80% on this product as well, a little bit higher rate. So max LTV on the investment when you're going non-QM, using anything other than full doc, is going to be 80%. So we have a nice range of options that we can do here. I do remind you, obviously, we have our profit and loss option. We have asset utilization. The show just doesn't permit us enough time to go through every single cash out option that we have. So I wanted to just highlight what are the most popular ones. But always look to the Mortgage Calculator for your cash out options. We do have over 5,000 products out there. We do train our MLOs to be consultants, so they will have the borrower's best interest in mind, which is what we strive to do. We're looking at the long-term objectives here.
All right, I don't see any questions, so I think we can wrap it up. Appreciate everybody tuning in. Remember, we do this 11 a.m. Eastern every single weekday. You can visit themortgagecalculator.com if you need some more info. Appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. And we hope to see you all tomorrow, 11 a.m. Eastern, for another episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Have a great day, everybody.